Yes guys, welcome back to another video, and today I'm going to be showing you how I made $3,000 on the Nasdaq in yesterday's PM macro. If you are looking for a reliable prop firm to get funded with, I'd recommend Alpha Futures. They're running a 25% off discount. If you use code ASH10 at the checkout, you'll get zero activation fees. So they have zero activations on their zero plan, and they have zero consistency rules on the evaluation. So you can literally pass in one trade. It's nice and easy. So yeah, if you guys are interested in that, the link will be in the bio. So this month of November has been quite slow in terms of not a lot of trades have been actually getting taken. I'm sat around break even for the month. So I've taken around 9 trades out of 70 macros, so that's 70 30-minute windows throughout the month so far that I've sat through, and I've only taken 9 trades. And the reason for that is because I simply have not seen my model. Lots of liquidity sweeps, market structure shifts, fair value gaps, but I am very precise for what I'm looking for. As of now, I've had 2 wins this month, 4 losses, and 5 break-even trades. 5 break-evens. But you know, some people may say, "Oh, take partial profits," but I personally don't like to take partials, as I feel like that ruins my risk to reward in the long run. Yes, on the day you may have made money, but in the long term, are you actually more profitable than the guy who's taking 1 to 2, 1 to 3 RR trades? I'm not too sure about that. The whole of today's New York AM session, as I've said, like both my wins this month have been from the PM session, and the losses have not actually been very big. So this one win wiped out 3 of those losses. So I'm sat around break even, slightly profiting for the month, but I'll just call it break even. But yeah, AM session, there was nothing. Since the open, we had just run up. There was nothing of interest. Then when we finally swept Asia highs, London highs, then we had that proper sweep of liquidity. But coming into the PM session again, I'm very wary of when I want to see a sweep of liquidity. So yes, we may have swept Asia and London highs at 5:30 London time, so that would have been around 12:30 New York local time. I wanted to see a resweep of the high coming into the PM, because it would have been an hour since we had that sweep of liquidity, so I'd want to see a resweep of an internal 15-minute high or low. So if we go into the 15-minute, we can see that we have this 15-minute high, and we have this 15-minute high on ES. Okay, perfect. So now I'm only looking for a sweep of liquidity on one of the 2 assets, so NQ or ES. So let's see what we get. Alright, perfect. So we can see ES has run up higher and swept out this level of minor buy side. So that is our sweep of liquidity there. Now let's quickly take a look at our bias. Looking at the daily, we would have swept this previous low, turning the bias neutral, and we've not traded into any bullish or bearish gaps, so therefore the daily is neutral. Looking at the 4-hour, we're trading out of a bullish and a bearish gap, so the bias could go either way, so the 4-hour is neutral. Looking at the 1-hour, so on the 1-hour we did trade out of that bullish gap, but then the new 1-hour gaps then traded it back into this large 1-hour bearish gap to the left, so therefore the 1-hour is bearish. And then if we look on the 15, if we look to our left, if we turn on my little fair value gap indicator, we have this large 15-minute bearish gap to the left that price is trading into, so the 15 is bearish. And then if we take a look at the 5-minute, we're also trading into a 5. We can see very clearly we have a bearish bias. So going into the session now, we want to see a low time frame model to match this high time frame bias. So we have our sweep up buy side liquidity on ES. Now we have a short term high that's just formed, so we can mark out this short term high. So the short term high isn't required to get swept. I only use this as a point of potentially a low time frame SMT, or price going out and taking out buy stops and then looking for a move lower, but it doesn't always have to go and take out the short term high. Now we can see that we have short term lows formed here on NQ and ES, and now we have a bullish order block that is formed on ES. Now this candle right here, one of my other students in my group, this candle was actually bullish for them, so this would not have been a bullish order block, but on my chart this closed as bearish. So this right here would be a bullish order block. I would look to get inversed, and that means that because we have it on one of the 2 assets, we don't need it on both. So that is a valid bullish order block, and I'd now want to see a displacement through the most recent short-term low. So there we go, we have a very clear and sharp displacement through that recent short-term low, confirming that market structure shift, and our point of invalidation will be this 5-minute low at 25,000. So I wouldn't want to see price come down and take out this low, as that would then invalidate the trade for me, as that would be a point of where I would look to trail my stop or potentially even go break even. So as long as that point doesn't get taken, it's fine. And we can also see that price is trading into a 5-minute gap. That's not an issue because yes, the 5-minute would then turn bullish, but we still have the 1 hour and the 15 minutes bearish. Therefore the overall bias is still bearish. So there we go. We have a 1-minute fair value gap that's just formed there. So we have this 1-minute bearish gap. And then if we look on ES as well, we have that 1-minute bearish gap paired with that inverse order block. So looking for a tap back on this fair value gap, we can see that also I may as well draw this out. We have this S&T at the highs as ES took out that point of buy side and we didn't take it on NQ. Going into PM macro, I'm marking out the most recent 15-minute internal high and low. That's my point of buy side and sell side. I'm looking for a sweep on one of the two of the assets. So we've seen a sweep on ES, no sweep on NQ, that's a bearish S&T. Now we've got a sweep of buy side matched with a bearish bias, so all we need now is a lower time frame model. We've seen a bit of structure being built and then a bullish order block being formed on ES, a clear market structure shift lower, inversing that order block and causing that displacement, leaving behind that fair value gap. So we've got that 1-minute fair value gap left, so all we're looking for now is a tap back onto that gap and we're in. As long as we don't take out that 5-minute low, that doesn't invalidate the trade, we're in the clear. Of this 1-minute bearish gap, we've got a stop at this short-term high for 16 points, and then I'm looking for the opposing draw of sell-side liquidity for 55 points. So let's see if we get an entry on price. So there we go, in for shorts there, running my stop at that high, and then running my TP at the low. Right, perfect. So now that we're in for shorts, at this first short-term low, that's where I'm going to look to trail my stop. And then the next short-term low, that is where I'm going to look to go break even, as that is the halfway point in between my entry and take profit. So there we go, we can see that price then swept that point of trail stops, so I'm simply going to trail my stop to the next short-term high. So we now only have 13 points risk on this trade. Now if price takes out this short-term low, I'm going to look to trail my stop again. So there we go, price is now taking out that next short-term low, so I'm going to trail my stop just above the fair value gap. There we go, so we've seen price is now taking out that point of break even, so I'm now completely risk free there. So break even on this trade, and now we can see that price has swept that short-term low and instantly reacted, but what we have right here is a bullish order block again getting inversed and paired with this fair value gap right here. So, and we have also a bearish order block that hasn't been inversed. So we have a bearish order block, an inversed bullish order block, and a 1-minute fair value gap. So this level was very strong and I wasn't expecting it to get broken, and we had our stop at a very good position at break even just above those confluences. So price nicely respects that 1-minute bearish gap, and for price to run very smoothly to final TP, it needs to run algorithmically, therefore tapping into these bearish imbalances, respecting them and moving lower, creating them, respecting them, moving lower. So we can see another 1-minute bearish gap has formed. So I'm going to draw this out right here, and we can expect price to tap back in and begin to move lower. So there we go, price has now tapped that gap and instantly respected it, and we get that reaction lower. And then coming now down into price, we see that acceleration lower and price smash final TP just like that. So that was a very, very clean example of the silver bullet trade that I look for. Very clean in terms of how the model actually formed. We had a bit of consolidation obviously midway throughout the trade, but it was simply just taking out the lows, creating bearish gaps, tapping into those gaps and moving lower. So you got to let price do its thing. That's why, you know, I'll never close out early. I'll never, you know, be phased by the dollar amount, because I simply do what actually makes sense. I've had 5 break-even trades this month, guys. 5 break-even trades. I don't think you understand how strategic you have to be to let that sort of thing happen. Because a lot of people would close out and be like, oh yeah, I've made money, but that would in the long term hurt your habits. You'd then fold back into bad habits. Let's say you just broke out of a habit of closing out early, and then you're doing it again, you're just breaking back. And so you just want to be very strategic, not worry about anything. As soon as you're in the trade, the only thing you're worrying about is how you're going to actually monitor and trail your stops and manage the trade correctly. So yeah, last one. So I hope you guys have enjoyed this breakdown. If it did, and if it was helpful, then subscribe so you can find more breakdowns like this. And if you do want to get involved in the live group, the link will be in the bio. There is also a one-to-one mentorship option where it will be sessions between me and yourself. That's a little bit extra than just a live group. But if you do want to get involved in just a live group and watch the daily analysis and me take the execution live, you can also speak to me over the Discord call, so everyone's able to interact with each other. So it's a very open, free space community that I like to keep. So if you do want to get involved in that, link will be in the bio. And if you want to get involved in the one-to-ones, then that option is also there. You can contact me on Instagram. My @ is down there as well. So I hope you guys have enjoyed this one, and I'll see you in the next one.